traders, and welcome to a new video on open interest, a Patreon suggested video. I've talked about this topic before. This is nothing new. I'm going to talk about something a bit different today. We're going to talk about the relationship between market volatility and open interest. Really what we're looking at is, can we use open interest as a gauge to determine whether a move is going to be a very high volatility move or more low volatility move, such as, prices here, a bit more low volatility than a price rise, or something a little bit more high volatility. What exactly can we use to determine whether the market's going to go crazy or whether the market's going to stay a little bit more chill? The first thing that I want to talk about is just a quick refresher on what is open interest for those who may have not seen my videos from a year ago on open interest. Open interest represents the amount of contracts held by longs and shorts. So when you see these numbers here, remember that one contract on BitMEX is equal to $1 on XBT USD, meaning that we currently have open interest of 890 million contracts, which is $890 million worth of longs and shorts. Now, what I've talked about before is basically just what every single article on open interest is going to tell you. Typically, when price follows open interest, price continues. Typically, when price diverges from open interest, typically price reverses. This is just, the common narrative that a lot of articles are going to tell you. But like everything in the market, it's not always going to happen. That's not how the market always works. Case in point is something like this. Consolidation, right? Consolidation, price rise, drop in open interest, you'd expect this to drop price or to reverse price. No, price just kept rising. Why does that occur? And that's exactly what I want to talk about in today's video. So first, let's answer, why does that occur? The first thing that I want to give you guys a quiz on is, do you believe that low volatility or high volatility patterns are more likely to increase open interest? Give you guys 5 seconds for that. Low volatility patterns are more likely to increase open interest. High volatility patterns are more likely to decrease open interest. So when you see a high volatility market move, typically more often than not, you're going to see open interest decreased. Low volatility, that increased open interest. High volatility, that decreased open interest. Something like this. Low volatility, that just tended to increase open interest. Anytime you get a spike in volatility, you can see that that spike in volatility corresponded to a drop in open interest. Now, why does that occur? Well, when the market moves very rapidly in a very short period of time, it's going to be much easier for positions to close than for positions to open, because that's A, going to be liquidating people, closing positions, of course. B, it's going to be stopping out traders who put their stop losses right above the high, like that. And C, any traders who want to take profit. What if I'm a long here? If I went long here, and I'm interested in taking profit any price higher, price goes higher, I'm closing my position. It's going to be easier for positions to close than it is for them to open. In low volatility, why is it that open interest just tends to slowly increase, the kind of pattern? Well, that might occur because any shorts who are currently holding positions might not want to close here, because they might be, if a lot of traders had shorted here and the market's here, they might not really want to take the loss because there's really not much reason to. Any longs who bought here at the same time their shorts had shorted, there might not just be any reason for them to close their positions. Their stop loss might be here, their stop loss might be in profit, they might just be looking at higher levels, but there's no market event that signals for a lot of traders to close positions. So that's really why you're going to see high volatility price moves are going to tend to decrease open interest, and low volatility price moves are going to tend to increase open interest. We get a surge in volatility here, and we get a decrease in open interest, and then as volatility just begins to wane off a bit, we get that increase in open interest. This isn't going to always be the case, but in theory, you're going to see these high volatility moves decrease open interest one way or the other. But that's not the focus of today's video. Today's video is an actual strategy, not just us looking back and finding when open interest decreased or increased. What I want to talk about today is when we see price consolidate or price trend or price do this, price do that, what can the change in open interest tell us about how volatile price will be in the future? Well, before I tell you guys that, let's first just look at what happened here. The market was consolidating here. Let's begin this. Open interest of $864 million worth of longs and shorts right here. Price continued to do absolutely nothing. It just consolidated. Not much was really happening. Open interest rose to about 886 million. So we went from 864 to about 886, which is an increase of about $22 million worth of longs and shorts. With more shorts, that means that there are more stop losses above here, because every time a short enters, some of them are going to put their stop losses above price, as you're typically taught to do. And more longs, because again, there's more longs and shorts entering, means more stop losses down here. More shorts entering means some of those shorts are going to be highly leveraged, meaning that their liquidations are going to be above price naturally. More longs entering, more liquidations potential around here. And if you get just a continual increase in open interest, as price is flat, you're going to see just more stop loss potential, more liquidation potential above price of shorts, more stop loss potential, more liquidation potential below price for the longs. And that increase in stop losses and increase in liquidation potential is going to potentially increase volatility as more traders get stopped out, as more traders get liquidated. That's going to further that volatility and also potentially further that trend. So because of this pretty significant rise in open interest, it led to not just a stop loss on and then just price didn't do anything. It actually led to an uptrend that went from 11.7K all the way up to about 11,700 to 11,880. An increase about 180 or about 1.7%, by my math, 1.6, 1.7% from this high up to here. And why is this important? Well, this is very important because what you have to know is if you're looking to short, let's say you're looking to short and you see you see open interest increasing here naturally and price begins to rise. You might not be inclined to short right here because you might think that with this many new positions on the books, that price is just going to continue to probably move in that direction until it liquidates and closes out the positions of all these short-term traders who had shorted here. And we do get a point in time where we actually get that to occur. We get high volatility to the downside, which leads to a decrease in open interest. And what we notice is actually that, think about it this way. Open interest increased from here to here, to about here. And then open interest decreased and actually cut out about half the positions that had opened here. Now that's a major simplification because, of course, this open interest decrease doesn't mean that half the positions that entered here had closed positions. What it does tell me that open interest went to about 50% of what it was previously in consolidation. So a decent amount of positions had been stopped out, liquidated, or had taken profit. Now where this is important is you may wonder, okay, so open interest increasing in consolidation means more fuel for the fire. It means that the longer the price consolidates, the longer that open interest increases, the more potential there is for price to do some wacky things. Of course, that's how the market works. More liquidity to liquidate shorts, liquidate longs, stop out shorts, stop out longs, and just a flurry of market activity. What if open interest decreases during consolidation? Well, then naturally, I'm not going to expect a major price move. I'm not going to expect major market volatility. I'm going to expect just a continued amount of market volatility. Case in point here. Prices ranging from here to here, open interest actually decreased about 907 million, to right before this price drop, open interest was about 896. You have a drop in open interest of about 11 million. So when the market actually broke its low, did it do so on major crazy market volatility? Honestly, guys, no. This price move here wasn't that different from the price move here, wasn't that different from the price move here. This wasn't major market volatility. Why? Well, we don't see a major increase in open interest, so we don't really expect a major change in the market volatility, as you can see here. And this trend doesn't really continue, whereas this trend did continue after it broke the high. This trend just stopped at support. So this open interest relation to market volatility can also even be used to determine whether support or resistance are going to hold. Here's why. If you have a major increase in open interest, lots of new longs, lots of new shorts entering the books, when the market begins to trend in one direction and begins to hit some stop losses and hit some liquidations and begins to get the ball rolling, With such an increase in open interest, I can expect that the price is going to be very volatile and maybe just continue in that direction, blow through support or blow through resistance. When I see open interest flat or open interest decrease, we might not actually even have enough fuel to burn pad to just plow through supports. So this can be used to see whether increased or decreased in open interest can be used to determine whether a support or resistance level will hold, because you're looking at how volatile the market will likely be because of more positions on the books. We can also do this on the 5-minute. I don't have to just do this on the 1 minute and go to these, super short-term price moves. We can look for another pattern of consolidation, and you can see just kind of similar patterns. I want to scroll back a bit because we've talked a lot about, it's being a bit buggy right here, but we've talked a lot about the current price action. All right, you can see high volatility led to a decrease in open interest, very, very natural, very common as well. Now what we see here is something a little bit different that I do want to talk about. It's not always the case that we're looking at market consolidation to gauge whether the price move will be volatile or involatile, because you can also look at a price trend. Price is in an uptrend here, and open interest increased. I think that's kind of that's pretty obvious here. From this price low, we get open interest at 710 million, and from about this point here, it was at about 740 million. So 30 million increase in positions. That's exactly what had happened on BitMEX. There were 30 million US dollars worth of longs and shorts, more longs and shorts from this price point than there were at this price point. What that means at this price point is that there's more potential liquidations, more potential stop losses of anyone, of any longs down here and of any shorts up here. And what ended up happening is you saw price just continue in that direction because there were more positions and there was more liquidity to be had. As you can see here, we get one, price high, we get two price highs, three price highs. And really what I'm trying to show here is that you can use open interest as a gauge for just how far a move is going to go. I can go extreme and show this on the 1 day, super zoomed out, because this one's really cool. Look at this amount of consolidation here. Let's just begin at the beginning of the consolidation when open interest was at 330 million. Right before that major volatility move, which is really the end of that consolidation, we have open interest at about 620 million. So we get an increase of about 300 million longs and shorts over this period of time. That means that there's major liquidation potential, lots of stop losses to be hit if the market breaks out one way or the other. Basically what this is saying in simpler terms is such a massive increase in open interest is going to tend to lead to not just a stop loss hunt, but might just lead to a significant new trend emerging because there's so many new positions coming on the books. That's exactly what happened here. Even better yet, after this high volatility, the market went flat and open interest just continued to increase. We went from 455 million to, at this point in time, right back up to about 620 million. So positions rebuilt, more positions were added, adding more fuel for the fire. We get the fire that occurs right there. The fire rises. That was a movie quote. Some of you might get that one. I always like to inject movie quotes into my videos. Keeps you guys on your toes. So this is a bit of an extreme example because this is the 1 day, but you can use this on the 1 hour as well. As you can see that these increases in open interest lead to an increase in the market volatility, in the future market volatility. We can see that just as after price had done this, we get a steady increase in market volatility, right? In open interest. We go from 705 million up to about 760 million right before the price drop. So we're getting an increase of about 50 million longs and shorts after this major volatility. So I'm expecting here that the price is going to, stop out a lot of traders, liquidate a lot of traders. Now you may say, well, okay, increase in open interest, yeah, we get this increase in volatility. Let's talk about what if that hadn't happened. What if open interest had to continue to decrease here as price did this? Then I actually probably wouldn't expect a move this volatile because there wouldn't be as much stop loss potential to hit. There wouldn't be as many liquidations to further fuel the price going in that direction. Potentially there would only be a few liquidations and a few stop losses that were hit, and the market just bounces back and continues to range. But because open interest increased like that, you see price decrease like that. Or you see the market volatility Market volatility increased like that. Same thing happened here. Look what happened right after this high volatility price move. Open interest just increased to a point where there were so many new positions on the books that the price just whoosh. Do not think for a second that an increase in open interest leads to a decrease in price. You have to remember that we're looking at market volatility. Market volatility can be up or down. Okay? I'm showing examples here of where price decreased, but the same thing can be said for price to increase on high volatility after we get an increase in open interest. It's not just these low volatility. It's not just price going down here. You know, you can see here we have just a steady increase in open interest, very steady increase in open interest, really, from about 698 mil, actually not too steady, to about 740 million. So about 40 million more contracts on the books, and yeah, then the price goes crazy. Again, if I hadn't seen, why did the thing just spaz out of me? It took me to a whole nother dimension there. Again, if I hadn't seen an increase in open interest around this consolidation, I'd expect that the consolidation would just continue, or I'd expect that just we get a miniature price move down to here, maybe a miniature price move up to here, and then price just continues to range. Because really the thesis or the conclusion of this is that it's these increases in open interest that can lead to massive trends to emerge, that can also lead to these massive wicks that emerge. An absolutely insane wick that recently occurred was this. I mean, this is insane. Price goes from a high in 1 hour, a high of 97.30 to a low of what, 9,100. Massive market volatility. Why does this occur? Well, price was very, very volatile. Price didn't really do anything here from here to here. And that began when open interest was at 722 million. That changed. Open interest went to about 760 million. I'm reading that from these numbers here, by the way, guys. 761 million. So really, to quantify that, we go from 721, to 761. That's an increase of $40 million of longs and shorts. Now, with that increase of longs and shorts here, get ready for some carnage. And we got that carnage right here. Because low volatility, paired with an increase in open interest, can lead to these wonderful high volatility price moves. Had open interest decreased, had open interest just kind of completely stayed flat and not increase like that overall, maybe we wouldn't have gotten this kind of price move. So remember that when you look at open interest in the future, don't just think of it such as an increase in open interest leads to a continuation of the price move. A decrease in open interest just leads to a decrease, just leads to a reversal of that price move. Think about it a bit different now. Think about it, I'm seeing an increase in open interest from here to here as price was rising, okay, which means that there's now more potential for price to move in a higher volatility fashion, which means that the present resistance might not hold because we get an increase in open interest. We're going to get more volatility, making it more likely that this resistance is going to hold, and that's exactly what happened here. We see an increase in open interest right here in the current point in time where I have no idea what's going to happen, but I can tell you this. 885 million open interest. We are now at 895. So slight increase, about 10 million in open interest. If open interest continues to increase, I'm expecting that we're going to get some massive volatility that probably this resistance and this support will not hold. Because if open interest continues to increase, then if price goes down to here, it could just go like that. If price goes up to here at the previous high, it could just go way higher. Because there's more potential liquidations to the upside, more potential liquidations to the downside, and a lot more stop losses all over here that are just going to further fuel that price volatility. With that, this is going to be the end of this video, the end of our little adventure on market volatility and on its relationship with open interest. If you guys have any questions on this or want to learn more, contact me, email me, visit my Discord, or pick up one of the guides if you want to learn more. With that, happy trading and start reading open interest.